Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, July 11th. I had to think about that for a minute. We got a couple economic news releases today, and one of them is the most important one for today, but yet has to be announced a little later this morning. So we'll get into that here in a second. But we'll start off right now at the trade deficit. This is our May's numbers. Back in April, we had a negative $50 billion in as a deficit. So we figured it'll pull back a little bit to negative 48, and basically the forecast came in, basically came in at the estimate. So better news there that it closed up a little bit, but again, still way huge. That's still a pretty big hole there. Next item on the agenda is the wholesale inventories. So basically, it grew about 0.5% in April. We don't have any estimates on this, but it came in at plus 0.3%. So still a little improvement there. So people kind of stocking up is what this means, that they're people are stocking up a little bit. So that's decent news that they're rather than negative, people are contracting, that they're still kind of growing a little bit. Now here's the important news. It's right here. It's the Fed minutes from the meeting back in June 22nd. So everybody's going to be really kind of watching what's going to be what was said in the meeting. These are the minutes that are going to be released, and this is what everybody will be waiting for. And this will be 11 o'clock Pacific Standard Time will be released, or 2 o'clock Eastern Time. So this is what all the investors, everybody's going to be watching for today, and it could be definitely be a market mover. So essentially what they're looking for is there any conversation about stimulus or quantitative easing, continuation of the twist program. That's what they're looking for. If there's no mention to it, doesn't look like anything's going to be done about, or ain't really any members really kind of bring it up. Probably the bond market will improve. The stock market will probably come down more. Most likely that's what's going to happen. If it does mention it, stock market could rally a little bit on hopes or inspiration that they're going to do something in the near future, and that could hurt bond market, as money will leave the bond market, go back into equity markets, and rates will go up a little bit. So just be prepared. So now we'll just jump over the headline news. So stock market's having a little light trading because they're kind of waiting for this at 11 o'clock Pacific Standard Time. But right now, it's currently all the markets are currently down. Some disappointing news in Europe is German courts delayed the constitutionality of the Stability Fund, so they're kind of holding things up on the Stability Fund over there. So investors are a little, have a little concern about that. But on the brighter side, Spain is tightening up their austerity measures, so of course, that looks pretty good as well. So we're going to go take a look at the bond market, see what interest rates are doing today. We have a drop of about 30 basis points, but don't be worried. That's due to a bond rollover. So we had left up here. We had a nice little rally, even broke above. We had a ceiling here, and it broke above that. Here we are is right here, but if we take the bond rollover about 30 basis points, we're about where we left off, about maybe 3 basis points for the day, and which is still good because what that means is that the pricing is still the same. All it is that they're wrapping up the bonds, packaging up for last month, and then creating a new one, and so you get new pricing based on the new month. And this month it came in about 30, almost 30 basis points lower. So even though it's at the same, interest rates will be still the same. Now we do have this gap we've had last about a week ago. Remember, we had this pretty big gap here, and we haven't closed that. So again, if we have good news about possible stimulus packages that are mentioned in the minutes, this could easily come in and close this gap up, and the equity markets will rejoice. So that we do have room for that, and we are pulling further from the 10-day moving average, and somehow we always have a way of whipsawing backwards. So be prepared later today that this could potentially happen. So right now, interest rates are about the same where we left off yesterday, but that could quickly change this afternoon. So just be prepared. You guys have a wonderful day, and see you guys tomorrow. Thanks for watching.